Sorry about that. Are we good? Immediately, thought you were going deaf. All right, cool. Welcome, everyone. I began with Trader Isaac. I mean, I wasn't even live yet. And he's hammering everybody to smash the like button. So please, smash the like button. Very proactive. Very impressive, Trader Isaac. On top of things, as always. OG1 Kenobi. I love that name. Thanks for the heads up on the no sound. Denny. Hello, my friend. Westlaw. Andy. Emilio. Hello, sir. Tom. Good to see you. The godmother. That's a new one. Larry. Hey, Bob. Problem with the oil sector is flat jet fuel demand. People are scared to fly. Yeah, well, they're not replacing jet fuel anytime soon with batteries, Larry. I read about this a few days ago, and it's one of the bright sides of the fossil fuel side of energy. So I think what's going to happen is that you saw the airlines last week flash a bullish Q reversal on the week. So what I think they're going to do is they're going to start front-running a recovery in the airline business. So while it doesn't look good here now, and it may not be good for the next couple of months, I still think that they're going to front-run the recovery. So I kind of think that what we need to do with the jet fuel play is say, okay, it's kind of like old news now. And at some point in time, as Dave Portnoy likes to say, Americans like to fly. We fly here. All right, so that'll come back. Good point, though. Tommy, hello? Okay, let's do this. All right, so we have the markets open, and the dollar is popping up higher here. It had a horrible week last week. And I'm hoping that we do get a brief rally in the dollar because I sold out of a good portion of my gold mining trade. And then a couple of days later, it broke out. So I'm looking for a pullback. And then I'm going to look to back up the truck on the gold miners, assuming that gold holds the breakout. The selection, so much backing and filling going on here, so much volatility. But I think net, we need to be bigger, bolder on gold and silver. Silver had a great week last week. All right, so gold up so far. Let's check out gold since we were talking about it, or I was talking about it. Gold is popping up higher despite the strength in the U.S. dollar. We're up about 1/3 of a percentage point off the session highs. Let's go to silver. What we're going to be talking about tonight, folks, are, yes, the futures action. We'll go through these quickly. Then we're going to segue over and into the economic data that's coming out this week. But most importantly, what companies are reporting earnings. Yes, it is earnings season yet again. Silver up nearly 0.5 percentage point. You have an industrial component besides a precious metal component to silver, looking very good here. Let's continue on with commodities for a moment. I want to go into agriculture. Freaking corn. Unbelievable. Look at this rip. Fed Chair Powell says there's no inflation, yet he changes the verbiage on inflation. It was a price target of 2%. Now it's an average of 2%. Why'd you change it if we're not there yet? We hit the target, then they move the goalpost. So what you're seeing are pockets. You're not seeing broad-based inflation, but you're seeing pockets of inflation. Look no further than agriculture. You need to take a look at the DB Agriculture Fund. I went over it in great detail in best stock charts. Sorry, I keep hitting the microphone. It's posted on YouTube and on the blog. That is one we're most likely going to be getting long of this coming week. If you just take a look at a weekly chart of corn, look at this. Major league breakout. Beautiful chart. If you take a look at soybeans, ripping. There's no inflation though, says Jay Powell. Wheat's coming off the high, but take a look at the weekly chart. We broke out. We broke out here the week of the 19th of September. And now we have a continuation breakout. Wheat's looking very good here. Yeah, we flashed a topping tail last week. So we have some resistance above, but I think that wheat's going up higher across the board. Ag needs to be purchased. So I'm hoping for a pullback. We're going to buy that pullback. Let's take a look at yields, or bond prices, I should say. This is a weekly chart. Ominous. We broke down last week on the 20-year bond ETF. The 10-year is holding up okay. 4-hour chart. So we saw an increase in yields last week. It looks as though, if I had to hazard a guess, what they're going to do is they're going to try to rally bonds, pushing yields lower. So let's watch for a breakout on the, I'm going to set an alert here, on the 10-year. RSI looking really, really good here. So we're long of some bank stocks. We're not overweight the banks, but we saw the 10-year yield breaking out on a weekly basis. So we did put on a trade on the banks. Our Rocket Mortgage trade, we got stopped out of half of that because it just wasn't working. So we didn't go adding to it until late in the week last week, but we did get stopped out. I am concerned with yields pulling back, that putting some stress on the banks because you have your net interest margins. That'll be impacted short term as perceived by the market for bearish banks. So beware. If we break out on the 10-year on a weekly basis, or a 4-hour basis, I should say, we're using a 4-hour chart, you may see pressure on the banks. So be careful. We're going to remain long, and we'll look for a setup to go adding more, but bonds need to weaken up some. But you did see a breakdown on the 20-year bond ETF last week. We'll see whether or not any rally is sustainable here, or do we roll over. If we roll over and break down to new weekly lows, you need to be buying the banks. Nat gas, spiking up high. Huge move up higher here. We're up nearly 7%. Huge move. Let's take a quick peek at a weekly chart. New weekly highs, new monthly highs. That's good for energy. Where's oil? We'll go with light sweet crude. We're down over 0.5 percentage point. Let's see whether or not this prior resistance level now acts as support. It's being challenged right now. So some pressure on oil. Let's go back to the dollar because that could be contributing to it. Dollar's coming off the highs a little bit. Okay. Let's take a look at what's coming down the pike this week. A quick peek at Predicted. And I don't really come on here all that much, but I was looking for, I heard there was, I was listening to Axel Merck. He's a fund manager out of California. And he's one of the guys I really respect, Axel Merck. And he was talking about a predicted model or predicted poll that was talking about whether or not we would have a clear winner on election night or by the 4th. And I was trying to find it. But I refuse to believe that this is the reflection of the true polling in this country, Biden up that by that much. You know, maybe I'm wrong, but I don't see that being the case. So I'm going to look for that poll. Maybe I'll talk about it during the week once I find it. Pete, hey Pete, considering buying short-term puts on JKS. Not a bad trade. That really blew off the when I spoke about it the day before, it pulled back, then it rallied back. Continuation move higher, if memory serves me. Let's bring up JKS. I was watching that myself as a potential short. This is a solar play. RSI 91.66. The thing you need to watch out for here, Pete, and this is what I would do, keep an eye on, price, obviously. You want to see some sort of topping action. Watch your volume. Volume is still very, very high to the upside. This needs to come in. And I like to see this MACD histogram flatten out. It's still trending up higher. So if you're going to enter, it's a good time. It's a good time to start nibbling on the contracts, but stay small and then look to add once we get that reversal day, a bearish reversal day, more aggressively, because you probably get those puts fairly cheap right now. Peter Schiff, gold to 25,000 in 20 years. Okay, wouldn't be a bit surprised. With the way the dollar behaved last week, anybody catch the dollar? I mean, this is bad. If we take out, this is a huge breakout on the U.S. dollar the week of the 21st of September. We have given up about 3/4 of that breakout. If we fail, if we undercut 92.75 and we close there, we're going a lot lower. Friday was a bad day for the U.S. dollar. Look at these Stokes. As I always like to teach members, when you have Stokes declining down below 50, rallies tend to fade. What happened? They tried to jack it up on the 7th, failed. Faded on Friday, and then on Thursday, then on Friday, a complete annihilation. This was a big move for a currency. And I think that we're going lower on the U.S. dollar. I think gold knows it. That's why it's up right now, despite the fact the U.S. dollar is moving up higher. You're welcome, Pete. We'll go over some chart requests in a moment. Okay, let's go to I need to go over JNJ as well. I was asked to do that. I have somebody going on a plane later on, and they wanted to know about JNJ. Let's do JNJ now. Let's get it out of the way before I forget. JNJ is reporting earnings on Tuesday, the 13th. So I think the chart is really pretty. This is a weekly chart. But I would not be a buyer in advance of earnings. That's not my style, to put on risk in advance of earnings. But this is a pretty chart. Volume last week declined versus the prior period, that's not what you want to see. Especially on a breakout. Look at the we'll revisit this in a couple of days. Or a week, I should say. We have a higher low on our Stokes. We did break down below support. However, we're hooking back up. We're above 50. So all is right with the world. Let's go to a daily chart really quick. And we'll wrap it up with JNJ. Nice breakout on Friday. I think we're going up higher here. Absent a poor earnings report, were that not out there as a threat to the share price, I would be a buyer of the shares. I mean, this is perfect. Stokes are perfect. Volume could be better. I mean, volume on a weekly basis, volume on a daily basis is not wonderful. And that's something that we saw across the spectrum. When I did the week ahead commentary for members on Saturday, the one standout was, with the exception of the small caps, volume was very weak last week. So beware, especially with the Tues and the S&P 500. All right, earnings. So this is the first week of real serious earnings, and it's going to be all about the banks and transports. Transports related to Delta, and I'm saying transports because you have Carnival cruise lines. That's more travel and leisure. But Carnival Cruise Lines comes out this week as well. Morgan Stanley's coming out. We have the largest semiconductor maker in the world, one of them anyway, coming out. So a big week. And we also have a lot of mining companies coming out. Not that they get much headlines, but these are sectors that have been performing. Sleep Number, this is one of my favorite stocks right now. They're reporting earnings. Alcoa, B of A, U.S. Bank Corp. Could have sworn I saw Carnival on here earlier. Kansas City Southern, more transports. JB Hunt, more transports. Big week. Energy, Schlumberger. I could have been wrong about that. Carnival Cruise Lines. Could have sworn it. Oh, they already had it. No, it's for 19. This is not accurate. All right, I could have sworn I saw Carnival Cruise Lines up here, but apparently not. Okay, let's take some chart requests. Let me go to the members area really quick on my other monitor. And we have SPCE, okay. Love selling premium on SPCE. This is Virgin Galactic. We'll do a deep dive. We'll begin with monthly charts. Not much data here. No, we do have a new monthly high. No breakout, though. 2193, stiff resistance. Weekly chart. Hey, Pat. Hey, William. Pat, I cooked up. I was getting my protein ready for the new week. Some of that sausage. It was really, really good. The sweet venison sausage you sent me, you gave me, it was good. Very, very good. Okay, SPCE weekly basis. We broke out the week before last. We had a continuation move higher last week. It was rejected at resistance. 2198 is the number to watch. If we manage to pull back to 20 bucks a share and the market is healthy, I'd be a buyer. We'll keep this active for the week. Or if we manage to break out, I want to keep sensitivity really low. I want to see a close above that $22 per share mark. And we'll keep this active for the week. Now, I took a look at the daily chart. I kind of cheated. I do not like the way the daily chart looks. You're going to have some minor support right at $20.80. I really want to see 20 bucks a share. For those folks not familiar with Virgin Galactic, it's extremely volatile. So it may seem like on a percentage basis a long way to get back down to 20 bucks a share. It's not. It could be there like that. So show patience, wait for the pullback or wait for the breakout. A mixture of both is fine. But I don't see a compelling reason right now to go opening up a new trade right in the middle of a trading range. It just seems like a little bit too much risk to take on at current. So that's SPCE. Come on, Bob. CWH. That's for Emilio. Camping World. This one's pulled in a bit. It was in Fuego. It became overbought. This is a monthly chart. Looks like we're falling into a consolidation range. You have a big volume shelf right at 3150. So I wouldn't suggest buying it right here, right now. There's a war going on at this price point. And as you can see, there was a big rejection at resistance. Where I would be interested is down here. Remember, going into the election, volatility, although volatility broke down last week, I still think we're going to have a volatile market. Keep a little bit of sensitivity. Okay. So that support level is at 27.69 per share, give or take a dime. Daily chart. So volume by price is picking up a support level right here at 80.75, where we bounced. You know, I would be, on a daily basis, I'd be waiting for a breakout here. If you bought it, I would use this tight stop right below the lows of Friday What did I say? $80 per share? I can't see the threes for an 8. This font drives me crazy. So sorry about that. Support is at $30.75. My apologies. If you buy here, you want to use a stop loss. Use a stop loss right below 31.73 per share, and get out. And then if it doesn't break down and it holds support here, look to add on a breakout above either A, 31.52, or B, this upper band of resistance. Set it and forget it. So this is a sector that's in fuego right now. I expect it to continue to be in fuego. It's just a matter of buying it right. That's all. So it's respecting support at current. If you want to nibble, scratch the itch, I'm all good with that. Stop loss right below the lows of Friday on a closing basis. Overstock. Before we shut down tonight, folks, I'm going to circle back. We're going to go over the futures again. Now, Overstock certainly benefited from the COVID. And we are at current consolidating. Seasonality. Not a seasonal, you keep always saying seasonably rather than seasonally. Seasonally. I need a speech coach. Seasonally, October is not a favorable period of time for Overstock. November becomes better, then it really drops off a cliff in December and into January, February. So late January is when you want to start picking it up. February kicks off a really nice sequential run through to June. So that's a great seasonality trade. But at current, I think we're going to be stuck in a trading range for a while here. Maybe I'm wrong. We'll do a deeper dive. Let's go to a weekly chart. Here's our trading range on a shorter term time frame. We've been spending the past several weeks limping up and into resistance. Each week, we're seeing more and more topping action. And this is what I always say. You know, it's not going to end well once you get all of this hot money rotating into a stock, trading above the third standard deviation Bollinger Band, hammered. So I don't see a compelling reason at current to go buying the shares. If anything, I kind of see a short scalp opportunity if we fail to hold this support level. We'll probably come all the way back down to 61.50, retest that support level. We'll see if it holds. And if it does hold, then you might have a nice W formation forming. And the center of that W would be a high of 87.76. That would be your pivot point. So here's your left side, pivot point, right side. I'll speculate that it'll form. Then you're looking for your breakout. So we're entering a multi-month consolidation range here. I don't see a compelling reason right now to go buying unless, of course, we close above this upper band of resistance at around, that's at around $88 a share. So a long ways away. So daily chart. It's in an ascending wedge for ascending triangle formation. You know, I can't buy it here. You either need to buy the breakout for short-term swing trade or wait for a pullback to support, buy it there with a stop right below. You have a volume shelf right below here. If you break down below 78.12, then you're going to want to look to get out. So just be careful here. I would not buy it right here, right now, on a breakout or on a pullback, one of the two. Tommy, GPOR. Gulfport Energy. All right, this is one that's been in the bear market for quite some time. Do we have a bottom? You know, looking at the indicators, there's a reason to be optimistic. We're beginning to become constructive on the indicators. Where we're seeing a higher high on RSI, but we have no breakout here. Now, the problem is with price. We are right at a volume shelf, the lower band of that volume shelf, where if it breaks, what is it, 35, let's call it 34 cents a share. If it breaks, it's going a lot lower. Now, to buy it here is a good risk-reward entry point because we hit this bottom back here during March. March. Rallied in April, slow, orderly pullback ever since, and we're retesting again, and now we're bouncing off the lows. It's not a bad early-stage recovery play, especially with the bear market. Energy's been in. It's starting to bounce back now. So is a speculative trade? Sure. It's interesting. Weekly chart. So as I mentioned before, you have a W formation forming. I mentioned on overstock. Here's your pivot point right here. Let's call it 267, 268 per share. We've broken out on a weekly basis. I have no problem with nibbling here. You're so close to critical support. Why not? Add more on a rally up and through $1.57 per share, because that'll have you on a close above that mark, not an intraday period or an intra-week period. You want to see a close above that mark because that'll take you above the volume shelf. A lot of backing and filling. There's a war going on within this price range. So allow the shares to come to you and build on strength. Stokes are looking good. RSI looking very good, weekly basis. Higher lows. We broke out last week. Confirming price. Daily chart. So what we're doing right now, and remember, we're still in a bear market, right? So we broke out on Thursday. I'm going to say we retested on Friday. I think we could still pull back a little bit further here. But you can see how when we hit that third standard deviation Bollinger Band, how we were immediately rejected. So no rush. Let it come to you. I like this price point right here. It was support back here in August, then again in September. It became resistance later in September. Early October, it was resistance. Now it should act as support if it's a healthy stock. If it's not, if you buy there, stop out right below it. So that's my story with Gulfport. Let's take a look at seasonality. It's not going to be favorable. I mean, we've been in a bear market for quite some time. October, it's horrible this time of year. November, really bad. December picks up, but early in the new year, very, very weak. March is the month that it really does begin to pick up. So seasonality is not wonderful. Analyst ratings, do we have an opportunity here to see upgrades? Piper Morgan went to sells in August, not too long ago. Imperial went to a buy. I don't even know who that is. Stifel Nicholas, that's a big player. And Wells went to sell ratings in March. They could be up for an upgrade. So you have the potential for positive headlines coming out. And that's as much value as I get out of analyst ratings. So that's my take on Gulfport. PLUG. Wow. What are you going to do? I mean, when I see a chart like this, I'm looking to short it. We're trading above on a monthly basis, above the third standard deviation Bollinger Band. Weekly chart, there's more upside here. Where's our RSI? RSI is rising. It's at 77.5. There's more upside here. And this sector's in play. If they're pricing in a Biden victory right now, these renewable stocks are in fuego. Daily chart. We became extended. We paused. Looks as though they're going to resume this uptrend fairly soon. So the path of least resistance remains higher. Unplug, seasonality, junk this time of year. But it's the election. I wouldn't want to be long after the election. The way this thing is going right now, it's pricing in a Biden victory. If you don't get that Biden victory, it's going to pull back. If you get a Biden victory and it continues to press on to extreme overbought levels in advance of Election Day, expect a pullback on the news if he wins. So I had no problem with buying it on a continuation breakout, or if you want to keep very, very disciplined with your stop, if we pull back to support, open the trade, add more on a breakout, and momentum trade it. Use a trailing stop loss order, but I would be out if it gets overbought before Election Day. NVIDIA and then SMH. I'm going to take some requests from the audience in a moment. And then we're going to go back to the futures, see how we're doing. That's not the right symbol. Yeah, NVIDIA is lagging. Semis had a great week last week on light volume, but they had a great week last week. And NVIDIA was meh. So basically a big fat doji star formation last week. That's a sign of indecision. You got to give it to bulls in the short term anyway. The path of least resistance remains up. Semis did very, very well last week, albeit on light volume. Seasonally, if memory serves, this is a strong period of time for NVIDIA. Yes, it is. through to the end of December. Very strong seasonal period of time, especially if yields come in, folks. Weekly chart. We did break out, or we have broken out on the week, last week. But we do have resistance above, right here. We'll create an alert at that level. A little bit of topping action last week. If it pulls back, this expired my alert. Remove this. If we pull back next week, I'd be a buyer at that support level at around, was it 583? You got to do something with this font. I want to share this chart with you so you have it, Emilio. All right. So, Amelia, that's for you. That's NVIDIA. Franklin. Hey, Franklin. Just came on board and was wondering about the transportation. Still looking good to go higher? Yes. We'll bring it up. We'll bring it up because it's very important, the transportation sector. WKHS. Everybody loves WKHS. Okay? Bob, I'm on board with your political views. Thank you. Larry, maybe Valero Renewable has more upside than XOM? Maybe. Maybe. It's going to take a long time before they get rid of fossil fuels. And for those people that are out in California, I heard about, and I know that maniac governor. I mean, I thought, well, I can't talk about my governor right now. I have a issue going on. The California governor, he's suspending, if you have a business in California, he's suspending your ability to carry a loss forward. Think about it. How can you do business in that state if you're unable to carry a loss forward? You have a bad year. You want to carry that loss forward to the next year. You can't do it. He suspended it. No wonder why everybody's leaving California. And plus he wants to take everybody's off of fossil fuels by 2030 or 2035. He's out of his mind. All right. Let's go to semis, and then we'll go take some requests from the audience. Look at this breakout last week on the semis. New all-time highs. 184.73 support. If we hit that, that's a good entry point. Stop loss right below. Daily chart. Nice day on Friday. We broke out on that day. Stokes are rising. RSI is rising. Clear blue skies. Semis are going higher. We like E. All right, let's see what symbols I need to get to. I'm scrolling, folks, looking at the chat box. Do you think, Amerimigo's question, do you think that GDXJ could reach 70 by November options? You're asking a lot there. I think that what you would need for that to happen is an undecided election. I mean, even if you get a Biden presidency, that may send it up higher. I'm assuming that you're going to trade the monthly options and not the weeklies. So is it possible? Sure. It's definitely possible, but I think you're going to need some sort of conflict or a market disruption. Biden's a market disruptor because no matter what, no matter who gets into office, Trump, Biden, spending's going up. Because if they stop spending, the economy collapses. So the only difference is going to be the degree at which we pump out money. And it's all going to go to social welfare under Biden. This is not politics, it's fact. It's not opinion, it's fact. So I know sometimes people get upset when I talk about politics, but it's fact. So, and he go to his website. He's all about it. Green New Deal, social welfare, wealth redistribution, et cetera, et cetera. So that being a known, I would think that that's going to keep a bid under the GDXJ. I think that what's more concerning is if you have a constitutional crisis. That's going to send gold and the miners through the roof. You may even see the dollar rise short term because that's fear. Money will leave stocks. They'll go into the dollar. They'll go into bonds. They'll go into gold, the miners. So it's possible, but it's a stretch. You need certain events to unfold, and that's pure speculation. It's one of those things where you want to have a crystal ball to see what's going to happen. But it's certainly out there. It's certainly a possibility. What else do we have? Fastly. Beautiful chart. I have a bunch to get to. I'm going to go with weekly charts, daily charts. We broke out last week. Watch for a pullback. 118 per share. I'd be a buyer at 118 per share. With a stop loss right below. If we fail to hold 118 per share, you got to get out. That's a breakout point failure. Daily chart. Daily chart, they're probably going to spike it tomorrow morning. It'll become overbought relative to the third standard deviation Bollinger Band. I wouldn't chase it. I mean, it doesn't end well. I mean, look, if you would have chased it back here, hammered. So just beware. It's a bit extended relative to its third standard deviation Bollinger Band. The safe risk-reward entry trade. Wait for the support level to get tapped. It's certainly possible. Indicators look strong. I don't think there's much data on Fastly to use. No. So we can't use seasonality. Looks like there's a bunch of buys already. There are a few holds. So if we get upgrades by Citi, B of A, Oppenheimer already has a buy rating on it. That could be, Piper went to a hold in August. So these are some names that may help with headline news, driving the share price higher with an upgrade. But I would wait for a pullback to initiate a trade. And if you're long at current, keep in mind we're very close to overbought levels. Start thinking about using a trailing stop loss order, at least scale out, let the market take you out of a portion of your position, and let the rest ride. First Solar. And folks, while I'm thinking about it, because I saw Trader Isaac, can you smash that like button, please? He reminded me first tonight. I'd appreciate it. It helps me out so much with the YouTube algorithm. This is incorrect. This is not First Solar. I thought it looked odd. Okay. This looks what better. We're on the verge of a major breakout here. This is a monthly chart. We have already put in new monthly highs. Weekly view. Before I leave the monthly chart first, I want to share with you an observation. There's not much in terms of overhead supply above. So if we break out, there aren't many sellers above looking to get made whole. Weekly chart. Looks like they're going to make a run at a breakout here. Stokes are hooking up. RSI is hooking up. I couldn't condone a buy right here, right now, because we're right at resistance. Daily chart. Yeah, same thing here. You know, I think the way to play it, the smart play, pay more. Wait for the breakout. Wait for the retest. Build a position. We'll keep it active for the week. Seasonality. Going back 14 years. November is a meh month. Usually down. But December is very favorable seasonally. October, up about 50% of the time. So, pretty neutral through to December, and then it becomes far more favorable. Analyst ratings. We have 9 hold sell ratings that could turn into buys, so that's good to see. So First Solar, I like on a breakout and a recapture of resistance at, let's call it, 82.25 per share on a closing basis. I think it's going up higher, especially if oil begins to pick up. Pat, CCL and PIC. All right, for disclosure purposes, we opened up a very small opening position on Carnival. Now, it hasn't worked for us, so we haven't added to it yet. I want to clean this up a bit before I start. Okay. So the monthly chart, all it's telling us is that we have a ton of resistance at 18.17 per share. To make it very, very simple. Let's drill down to a weekly chart. Now, what I think is setting up here, folks, is a W formation. Here are your higher lows. Now what we need is a breakout above, what was that price point again? 18.17 per share. If we get above this volume shelf and consolidate, that puts into play the pivot point of the W formation right here. 25.30 per share. Here's your W formation, left side of your W, pivot point, right side forming, higher lows. We broke out last week on the stochastics. We broke down 2 weeks ago on RSI. Now, seasonality, I really don't think is going to come into play this year. We'll take a look at it anyway for giggles. Seasonally, a very favorable period of time. Going into the new year, then it drops off. We may flip the switch this year, meaning a weak back half of 2020, a stronger first half as the economy opens up. Analysts, now this is going to be interesting. This is one of the reasons why I bought it, is that you have, out of the 28, 29 or so analysts on this stock, only 4 have a buy rating. That's sexy. So that's a lot of potential positive headline news that can cause and feed into momentum if and when this thing starts to ramp up. There are a lot of shorts in here waiting to get squeezed, and I'm helping to help that happen. So would I go adding here, right now? No. It's in the middle of a trading range. It's got to start breaking out. 16, 17 per share. Interesting. Then we'll look to add on strength. Right now, I'm just going to sit with my position. Small opening position. If it fails, got to stop out. Oh, well, so be it. That's my take. What was the other one for you, Pat? Pick. Pivotal investment. Not much data on a monthly chart. We won't spend time here. Weekly chart. This did not end well. We have retraced all the way back down to the breakout point at 10.35 per share. Very weak on Stokes. Popped up higher last week. I don't see a compelling reason to go buying these shares at current. What was support back here on September the 24th was resistance on Friday. So I think you're going to back and fill here a little bit. I would prefer to see a pullback and a retest of the support level, form a W formation. This may be the pivot point of that W formation with a high of that pivot point at $11 a share. And I would nibble here. I'm going to raise this sensitivity up. That's fine. Pick. I'm making a note to myself because this support level that we're looking to buy at, if it fails and we drop back down into this trading range, it's very, very bad news for PIC. So I would be very, very patient here, very deliberate. Wait for a pullback and a retest or a breakout and a close above 10.89 per share. Four. Payment processor. Nice chart. We broke out 2 weeks ago. Daily chart. Nice chart. It got a little bit extended. Dropped back down. Retested support, 52.44. Nice. I think that you could buy the breakout here. 56.20 per share. Close above that mark. It's going up higher. Not much to talk about analyst-wise. Good looking chart. I think it goes up higher. Not much in terms of overhead supply. So when this starts moving, I don't know what the short interest is, but if it has a good number of shorts in here, it's going up high and going up very, very fast. So very nice chart. It's going up. Do you suggest a call on VIX in case of volatility is rising? Well, the VIX last week, let's bring up the VIX. I wouldn't buy calls on VIX right now. To answer your question, because of one chart. This chart here, this is a weekly chart. We broke down last week below support. So when you see relative weakness like that, RSI broke down too. It becomes very, very concerning. Now, we do have a support level which we managed to close back above. Not a significant support level. But that support level is right at 24.84. Where do we close? We close spot dead on 25. We cannot close down below that mark. So would I buy calls right now on VIX? No. You can even see here. If you're looking at hedge in front of the election, watch for a close back above 28.58 on the VIX. It's got to close above that mark. If we close above that mark, then I'd be okay, because we're back above a support level, and I wouldn't go way out in the money on them. I would just do front month contracts, and that way at least you have a hedge, or just buy SPY contracts, so the short or put contracts. So one of the two is fine with me, but you need to see us recapture that 28. Let's call it 25.19. You close above that mark, I'd be okay with it. Right now, it's under pressure on a weekly basis. I'd want to see a little bit of strength here. Stokes are weak and getting weaker. There's no rush. I would rather buy on strength. Because in all probability, from what I understand, President Trump has over $1 trillion in the Treasury, real money, in the Treasury that he could spend at his discretion. So at some point in time, he's going to unleash hell on this market, meaning the VIX. He's going to pump money into the election, into the markets, and whether it be a check out to everyone, but it's going to happen come hell or high water. So that's not going to bode well for the VIX. Wait for a little bit of strength. Then, especially if he comes out with the announcement that checks are going out, yet the market pulls back and VIX goes up, then you want to be a buyer of the VIX. Because that's saying, okay, it doesn't matter anymore. The market's going to correct. Good news is out, and that's the behavior of the market. They're selling on the news. That's when I would get bullish on the VIX. Not until then. Workhorse. I'm going to do the transports for you, Franklin. I don't forget about you. Beautiful chart. Breakout. It's going higher. This is a daily chart. You may get a pullback here and a retest of the breakout point. Stokes hooking up. RSI, really nice. Broke out. Higher lows. Seasonality. I like a little bit more data. We don't have it. Let's check it out anyway. 10 years worth of data. November, this is seasonally meh period of time. October, not wonderful, but this year, given the political climate, it's probably going to do fairly well into the election. LKNCY. LKNCY. I don't know what that is. The Godmother. Can you please check that symbol? LKNCY. I have it accurate. You just want to check that symbol. GPOR. Did we go over this one yet for Tommy? Yeah, we did that. Gulfport. That's been covered, Tommy. Apple. I haven't looked at this one in a while. Weekly chart. Poised to break out. 118.88 is the mark. We close above 118.88. It's going up higher. Daily chart. It looks as though they're going to take it up. We've broken out on a daily basis. We're going up higher here. Seasonality. October. The best month of the year is October. It drops off dramatically into November, December, up 50% of the time. Analyst ratings. I'm surprised at the number of holds and sells on this. I was expecting less. So Apple continues to look good here technically. I think it goes up higher. Patrick, Luckin Coffee? Madman. That's not Luckin Coffee. Can you check that again, please? I got it. Oh, yep. I see what, gotcha. Now I understand what you're doing. We're good. Thanks, Pat. William, if you're still awake, you got a good grandfather there. It's not coming up on TrendSpider. You know, right off the bat, I hate this company. I hate any Chinese company. So it was overbought. It's coming in. It has had SEC issues. So, you know, right off the bat, I avoid. There's so many other good stocks out there to trade. So I don't see a compelling reason to buy this stock, you know, barring the fact that it is an SEC problem, a legal problem. It's a Chinese mainland company. It's got to close above $4.40 per share for it to be a buy. Until that time, I would avoid it like the plague. Because you could see, that it was resistance back here, again here, and again this past week. Why buy it here, right? Way too much risk, not enough reward to buy it here. All right, I'm going to leave off with, pre-drag. Hey, Bob, no symbol, but how's Sober October going? Okay, so I'm glad you asked. So we're now beyond the midpoint because technically I started the last week of September. So it's going well, down about 8 pounds since the beginning of the month. So no booze, no very low carbohydrates. Shouldn't say no carbohydrates. Very low carbs. I cooked up Pat, who's on the chat box right now. He sent me over brought me over a whole bunch of venison last year. So I cooked up some of that sausage today, and I cooked up a whole bunch of chicken. So it's going well. It's going well. I just got to hit the gym harder. So it's going well. I may extend it out into November, though. Hey, Bob, did you get a chance to look at the Facebook message I sent you? I haven't looked at it yet today, Emilio. I'll check it out in a moment. Let's check out the transports. Sorry about that. Thanks, Jack. All right, Dow Transports. A very important chart to be aware of. This is our canary in the coal mine for the markets. And the Dow Transports broke out last week. Now you're going to have railroads reporting this week. You're going to have long-haul truckers reporting this week. J.B. Hunt. Mining companies are going to be reporting this week. They need transportation. So the chart is looking very, very good. I think it's going to go higher. But if it fails for whatever reason, and I don't like how extended we are on the daily chart, we're dancing on top of the 2 standard deviation Bollinger Band. It's probably going to pull back within the next week. We're probably going to get a few down days. Does it crash? Probably not. It's probably just going to consolidate and then resume the upward move. So I'm still bullish on the transports. If and when they do roll over, then I become more bearish on the overall market. All right. Let's segue back over. Yeah, venison's really good. And the stuff that Pat gave me, he gave some hot sausage. But I tried the sweet sausage, and it was even better than the hot. I usually like spicy, but I really enjoyed it. Let's take a look at the futures. How are we doing? Dollar coming off the highs. Gold gaining like a monster. Equities, small caps, now down. NASDAQ 100 up near the highs of the session. Copper down a bit, still strong. You know, you take a look at the transports, you take a look at copper, and you have to say, what's going on out there? Something's going on. We're on the verge of a major breakout again on copper. We've been following it. Very bullish on it, bullish on gold. Let's leave off with the S&P E-minis. They are now a bit negative. Right, so they come back off the highs of this session. So it's a long way between now and the opening bell. So with that, folks, beginning to fade here. If you haven't already smashed that like button, please do so. And everybody have a really profitable, yeah, you're right, silver's ripping. A really profitable trading week. And I will talk to you soon. Be well.